Hey everybody, hope we're all doing well. Welcome back to another Sunday sessions from LAGFX. So today I'm going to be starting off on the Great British Pound Japanese Yen. This is a market that I've actually been following quite closely now for the last few weeks, or realistically all the way back since the 28th of June. So a good sort of coming up 4 weeks now. I've been watching the price action, the structure that has been delivered on this market, because I've been seeing the fact that I think we're going to be going bearish slightly longer term. Obviously, we were bullish prior to this move. But what's happening here is that it appears we're sort of running out of steam. We've only just managed to break the high by a small amount. We're taking a large correction wave back down, and where it seems that we have reversed from that correction wave lower, we've come up to create a lower high. So at this point, it seems that obviously what was the demand that was running the market is obviously diminished, and looking at the supply and demand balance, it seems that it is much more heavily now into supply's favour. So the idea behind that being that our best opportunities are now going to be sells as we look to trade this market, making the assumption that this is sort of a ranging phase, and as we come out of that ranging phase, we should then see a nice downwards trend. So as I said, I've been watching all of the price action inside of here. We've had multiple areas where we've had supply zone taps and we could have looked to take sell positions from. As of recent, however, I was watching price trade back up as it's done here, and potentially come to tap us into some last buys to sell up here, paired with the fact that we had a little bit of liquidity in this region. All that the market has really done is now built up more liquidity right at this level where these highs lay and also those highs lay. So we have got quite a nice concentrated area of liquidity there on the off chance price does ever want to run that to mitigate something higher, or even to start running higher in the future. But regardless, after we did reverse here in the market, we've had that change of character, which is our sign of a reversal. We're going to be looking for price to run us all the way down to this low, which is pretty much like the previous low in the market that we are targeting as of right now. This is our liquidity low and our overall higher time frame point that we want price to reach. So the idea is that we want to find ways and opportunities to be able to get involved in the market. In such a case, it will allow us to actually trade price down to that final target. So we have two buy to sell candles here, which to me act pretty nicely as supply zones. I would just want to see price now reverse, take us back up, tap us into one of these zones where we can find some entry confirmation through Wyckoff, or the 1, 2, 3 approach that I have said when it comes to confirming an entry in the market. That is a great set of rules, set of criteria that you should follow. We have a TikTok on it, and I believe I have a Learn to Trade coming out within the next 2 weeks, which will also cover that concept and that 1, 2, 3 approach, as I said, just because having a strict set of rules when it comes to entering in on the market is so crucial, because it just ensures that we are removing any tangibles or variables that could come into play when it does come to executing, to ensure that we are simply working with probability and ensuring that we constantly have our edge. So that is the real power in having a set of rules. So watch out for that Learn to Trade video coming on the YouTube. If you want an insight into what that's going to be about, then as I said, check out the LAGFX TikTok, because it is on there now. So given my bias there on Great British Pound Yen, obviously just waiting to see some form of pullback, which brings us into a buy to sell, mitigates it out, and then we're looking at longer term sales. Here on Euro USD, very similar thing here, where we have sort of been ranging in the market, but it does seem as if we are tilting more heavily into the selling side, or it does appear that price is reacting to supply zones rather than demand zones. So supply is in control. As of current, we can understand that the smart money operators at institutions are wanting to profit from sales at the moment, and therefore a bearish trend is very likely to emerge. We see that there was, if you see the wicks, a nice buy to sell region inside of here, which I identified on a slightly lower time frame. We didn't have a full tap. I think the wick comes ever so slightly below the tap of the zone, but we can see that since there, price has reversed, and we have had bearish structure trainers down. So we can make the assumption that we've mitigated this region, and what's going to happen moving forward is that price will make its move lower pretty much as of now. So first things first, the thing that I'm seeing is this wick representing a buy to sell, which should hopefully attract price as a supply zone. We can see that that is quite a valid zone if we take that entire buy region. I don't really believe anything else here needs mitigating. Obviously, the buy positions that were opened in here have been mitigated out by this wick or this move higher. Up here, it appears that everything else has already been mitigated as well. So I think in my eyes, the most important zone for us to look out for as of right now is going to be this region here. Could go down to a 15 and try to overly refine this, which probably comes out to this zone here. If we really had to refine it, obviously this point here is the start of this entire buy, or that high volume buy that cleared liquidity. As we penetrate past that and trade back up, we tap into it. So what's happened is, if I get a brush tool and quickly explain this, when this buy to sells happen and we've pushed price through to clear the liquidity built up in the region, that buy has been activated right there at this low level. So right at this low set is exactly where the buy has been initiated. We see that that buy shot price up, we then came down, but this position is still open, or this buy still remains. This move back up has come to mitigate that out, and then we see that moving forward we don't really have any price action that comes back to mitigate that region. So that is my refinement process. That is the region I will be refining it to. So I will be setting an alert here in hope that on market open we can actually look to take a sell from that position. So looking inside of here, we can see that what's likely to happen is that this bearishness that I want to see emerge should just be a correctional wave, because what's happened here is we displaced the high after accumulating and put our first impulsive wave in terms of this bullishness that is being created. This bullishness longer term has, or should most likely have, the purpose of being this wider scheme correctional wave, with this being a single impulse, this being the correctional wave. So we want to at least see price come to tap into and mitigate one of these supply zones we've identified, because that is pretty much the purpose of correctional waves, is to mitigate positions, clear liquidity, manipulate the market. So that's my overall bias, longer and short term. This, in my eyes, is pretty much the only demand zone within this entire impulsive wave that needs mitigating. So I'm going to be watching for price to tap into that, because my assumption is that this is arguably the best, or in my eyes, the only ideal region where I'd want to get involved in buy. So we have an alert there. That's going to be obviously very, very relevant to me. But in order for us to take price down into there, we'll be looking at the start of the week to look at supply zones as we've done here, refine them, try and enter in on them, and take price all the way down to here. So getting in sales within this region, take profit down this demand zone, or maybe just an 80% partial on the off chance that price does penetrate lower. Now that is two markets we've gone through. I think we can have a very quick browse on US dollar yen just to see what that's doing at the moment. Obviously we can see that the market created a high. We sort of had a small push lower and a hesitation to move higher. You see that I was trying to get involved on sales here, where we managed to get a partial, and it did actually run to a nice 10 RR. The reason I was doing that is because I could see that price was reacting really nicely to multiple supply zones in this region. Supply was clearly in control, so I thought, let's just take a sell here on the off chance that price does exceed the final target. But I knew that there was a high chance that it wasn't going to, and that we were just going to have to take our partial profits, just because of the fact that how much we are hovering around in this region. There's obviously not a great deal of supply, and for the move, or the desired move, to happen, we would need to see a lot more supply in the market. So that was a bias there. Obviously price has since made a move higher, manipulated all of the liquidity in this region, because we see all of these wicks are representing liquidity, and basically had the reversal from there, exceeded the final target, making this our new protected high. We then come break that low, so this then becomes the protected high. So we're currently working within the region of this is a protected high, this as a final target. Let's go to a 15-minute. It seems like we are now having some demand introduced. Supply is no longer as dominant. Let's look inside of this wave down, or this impulsive wave down, for any supply zones which may be relevant to us in order to take price down to the final target. So that's our impulsive wave. Arguably the only regions I'm seeing which could act as supply, just off the very top of my head. Obviously I'm not going too in depth with this. as that's something that we do usually to update the clients rather than on the YouTube. We like to keep these videos as short as we can without ranting on. In saying that, I've already been 10 minutes here, so goes without saying. So there we go. Those are the two supply zones that I'm going to be watching in the expectation that price is going to reverse here, trade back up to, mitigate, tap into these, finding that reversal power with the supply that would be introduced from the mitigation, and using that 1, 2, 3 approach, as I mentioned before, for entries, taking that down to the final target, or at least partialing here, with the expectation that price may start running all of the liquidity lows and start us within a markdown fade. So that is my section of the Sunday sessions concluded. 3 markets there. If you have any questions about the analysis I have performed, just put them in the comments. I'll get back to you. But for now, I'll pass you over to Luke, who's going to go through a few markets of his own.
How are we getting on, guys? Luke here from LAGFX. I hope you enjoyed James's section of the video. He's gone over 3 pairs, and I feel that all of them show real good evidence to go with the desired direction that he wants them to. It'll be interesting to see exactly how they play out. What I'm going to do now is go over the 4 pairs that I'm looking at. So we've got Great British Pound to the US dollar, Euro USD, AUD USD, and Great British Pound Japanese yen. So jumping straight into things, we are looking at Great British Pound to the US dollar first. As you can see here, we have had clear bearishness that has been introduced, giving us lower highs and lower lows. We have now recently seen a break of structure to the upside. So this was a structural high. As we can see, it came down to create a structural low. This being the last lower low, this being the new lower low. This here was the last lower high. So we've been following this bearish structure. We'll just get my brush tool out. We'll see exactly what I mean. So as we can see, we are creating lower highs and lower lows into the market. This is great. But now what we've seen is actually a new higher low get created. Now this indicates the potential for further bullishness, you know, a trend reversal as such. What we've then had is a higher low get created as it's higher than this one. And now as of recently, we have actually had another higher high get created. So what I would like to see realistically is for price to come back, setting another higher low. And then we can look to get involved in the market here in those buy positions and ride that price up into our point of interest. Now, this point of interest has been put to a side, and this zone has been highlighted because I want to see price reverse here and give us those longer term sell positions. So with that being said, we can look for those shorter term buy positions as soon as we have that confirmation of its next impulse. As I say, we have just had a higher high created, so I would like to see some kind of pullback into an area that's been left unmitigated, maybe use the Fibonacci retracement tool, get in on a refined entry with our refined stop loss, and then hold that position up into our point of interest where we can then look to sell longer term. So that is my bias for the Great British Pound to the US dollar. I am a temporary buyer in this market, but a longer term seller. If you agree with this analysis, leave it in the comments below. It'll be interesting to see. What we're going to do now is go over to the Euro USD. So quite similar to the previous pair that we looked at, the Great British Pound to the US dollar, we are seeing what looks to be a bullish retracement. Now we want to get involved in this, or we can look to get involved in this. Obviously there is risk trading against the trend, but as long as we know the story and the footprints that the market is putting in, we can then look to take advantage of that and profit from those footprints. So again, we have seen a very bearish market over the course of the last month or so with very little retracements, and we need to see some kind of retracement. Again, this is what it seems to be doing now, putting in that correctional wave. Now, in order for me to get involved in this market, I will need to see a break of structure here, as this was the last highest point that the market created. So I want to see price break through that, give us those signs of bullishness, and then we can get in on some kind of pullback, ride it to our point of interest, and then we can look to be sellers in the market yet again. To build my evidence, we have an unmitigated area here. On top of that, we have all of this inefficiency that's been left over in the market. Price needs to realistically come up to this in order to find enough supply in the market to continue pushing it lower. So again, I am a temporary buyer in this market, but a longer term seller. So we could look for those buy opportunities, just wait for that further confirmation. Not like the Great British Pound to the US dollar where we've already had the confirmation. We actually need the confirmation here first. then we wait for the pullback, and then we can look to get involved. Now moving over to the AUD USD. Again, this market is very much bearish. We want to be looking at those longer term sell positions, as we want to be trading with the trend and not against it. As we can see, we've had lower highs and lower lows being put into the market. This is great. So in order to follow this structure that's being created, we need to find an area that price can come up to before taking its next impulsive wave lower. As we can see, following this bearish structure here, this is an area that I've found. We have some inefficiency just below and an unmitigated candle within this area. So it'd be nice to see price trail back up, very much similar to the Euro USD and the Great British Pound US dollar. Again, we've had the confirmation of what looks to be temporary bullishness. We've had a break of structure here. This was a structural high within this bearish structure. We've had a break above that. That's great. This looks to maybe be a higher low. So we could wait for this fractal impulse to finish, look for some kind of pullback, and then get in on those temporary buy positions before the longer term sells. Very similar to the previous two pairs that I've gone over, but it looks as though this week the markets are within a cycle phase where a lot of markets are actually correcting themselves before going on to take those next impulses. We have seen, the majority of pairs that I'm trading especially have been very much bearish. So we are waiting for those longer term sell positions, but there's no harm in looking for those buys before the heavy sell-offs. Now with the Great British Pound to the Japanese yen market, it's given us no clear direction realistically. Price is contradicting itself, giving us lower highs and lower lows, and then higher highs and higher lows. So price is actually contradicting itself. It's within a consolidation phase. So realistically, we just need to keep our eyes out and look for any breaks in structure or for structure to actually form that would be deemed valid. Then we can look to be involved in the market. So this was a market that I was a bit wary about. I was a bit unsure on the direction. Obviously, this market overall has been very much bullish. We have seen immense demand being put into the market, but we are starting to see that slow, which tells me or makes me believe that price could be looking to take a longer term reversal, taking us lower, providing us with those swing lows. I'm a bit unsure with this market. I would like to just see how price plays out this week. If we start to see some kind of structure form, we can then look to place positions based on the structure that's provided to us. But for now, it is quite range bound, and I would just like to see how price plays. That's my analysis for this week. I have gone over 4 pairs, 3 to be precise, and then I've kind of just spoken briefly on Great British Pound to the Japanese yen. But those are the 4 pairs that I'm looking at this week. Now, before I let you all go, I just want to remind you all that we do have a Learning Lounge group chat where we post all of our analysis, up-to-date analysis, should I say, in the Learning Lounge group chat from the analysis we have done in these Sunday sessions videos. So if you aren't involved in there and you want to keep track on how we are looking at the markets week in and week out, be sure to join the Learning Lounge group chat. Now, with all of that being said, I hope you've enjoyed this week's Sunday sessions video, and we'll catch you guys in the next one.